Investors and traders, welcome to the channel Market Chat Pattern. Today is 16th of July 2024. I hope everyone is having a great day. In this video, we will be taking a look at the key sectors for the US markets, and we'll start by taking a look at the financials. We will also be covering the energy sector, housing, consumer discretionary, the transports, and utilities. As always, this video is for educational purposes only, and it is not a financial advice. So let's start by taking a look at the KRE, which is the Regional Banking ETF. So, one of the reasons I wanted to brought this up was because we have seen a pretty big move in the Russell index, which is the Russell 2000. It is for the small caps, and one of the reasons is that look at what is happening in the KRE. These are the smaller banks, regional banks, which provide a lot of financing to these small companies, the companies with smaller balance sheets. So, this really shows that we have got a pretty good move happening in this index, which is actually also supporting what is going on in the Russell 2000, in my opinion. Now, if you have not watched the video that I did over the weekend for the US stock indices, I highly recommend you watch that. I will put a link to those videos in the description and also towards the end of this video. So please do watch that. In this video, I don't think I will be able to go into much depth for the Nasdaq patterns that we are watching on the levels for Nasdaq, S&P 500, Dow Jones, because we'll just more focus on the sectors here. But we'll towards the end of the video, if we have time, I will just quickly recap what we see happening in the market today, because as in the weekend video I'd mentioned, we are looking at a rotation happening, and this is what we are actually seeing happening in the market as well. So starting with the KRE, this is a pattern that we had been watching for a long time. So the long-time subscribers will know that we have this ABCD one-to-one price projection as high as $62 per share level, and our C point had been this, where the market had been there for a really long time, since February of 2024. So pretty much the entire 2024, the market has just spent very range bound, and what our pattern dictates is that this was a point C. So we're really carefully watching that. As long as this was not broken to the downside, we were actually looking for the market to move in a ABCD fashion higher. And one of the key things was, look at this trend line right here. We were also watching this trend line, because if the market was going to close above that, that was an indication that actually we are breaking out, and it did happen. And what happens with a breakout is that it broke out of it, and then it came right back into the range, tested the bottom of the range again, and boom, we have seen 2 consecutive weeks where the market is actually very strong. And in my opinion, we're moving towards the $62 per share level for the regional banking ETF. Now let's take a look at the XLF, which is the Spider Select Sector Fund. So this is the weekly chart for it. We can see that it's also been pretty strong, and in my opinion, we are moving towards $45 per share level on the weekly chart. We do have higher targets as well, but shorter term. 44 to 45 is what I am looking at for the financials. And here we go. This is the daily chart. Here we go. And on the daily chart, we can see that we have these bigger ABCD black one completing around 43.70 and 43.91. So roughly in the region of $44 to $45 shorter term is what we could expect. But look at what a fantastic move it has been. There we go, really supported by the momentum. So financials are looking strong. JP Morgan is pretty strong as an individual stock. Bank of America, the earnings came out, the stock is doing pretty well. Now I've done a full video about Bank of America beginning of 2024, in which we look at the longer term cycles which are operating in that stock. A really good video from an educational perspective, and also what we could expect from Bank of England stock, Bank of America stock. So I highly recommend that you watch that. I'll also try to put a link to that video towards the end of this video, so please do watch that one. Now let's take a look at XLE, which is the Spider Select Fund for Energy. And energy is one which has been actually performing not as well, and it was actually moving in this channel formation, but it has actually broken out of this upper band of this channel, and it's really doing this one-to-one price projection ABCD where the market actually closed. So the chances are that once it moved below 9130, we actually became bearish on this because it broke the 38.2% retracement. So it just might be a counter trend move, and the possibility is it's more likely to break back into the range here and possibly even move towards the $86 per share level. However, if it keeps on finding support from here, then this formation could in fact be a bear flag formation, and we could see ABCD much higher. But for now, we are more on the bearish side for this, and one of the big reason is that looking back around here when it's been in this big massive trading range, this found resistance from the 1.272 expansion of this BC swing, and we had this ABCD completed here. So that has led to a fair amount of pullback in this stock, and the chances are that there is further pullback to be expected in energy, and if that were not to happen, we'll find out quite pretty soon, because this ABCD, the market will actually begin to move higher from this level. So just watching 93.50 really carefully. Now let's take a look at HGX, which is the Philadelphia housing sector. Something really interesting happening right here. Look at this market has been very strong, moving in gaps up higher on the daily chart, and it just completed its ABCD pattern right here, right at the 38.2% retracement. It didn't fully, it came pretty close. It was close enough, and ever since we have been hearing from Mr. Powell, the chairman of Federal Reserve, his views about lowering interest rates. He was on the he was questioned by the committee, and then recently gave an interview. So he's been suggesting the Fed is actually preparing to begin a rate cut cycle. So we are seeing this, and look what a strong move it has been just in a few trading days. It's taken this high out, and really important and strong support came in from this level right at around 640.44 level. Let's take a look at this one on the weekly chart, because on the weekly chart it looks really interesting, and I can show you some of the underlying cycles that are operating in here. So with this kind of a strong move, what we are looking at is something really interesting. Let me show you. This big ABCD in blue is likely to get extended, and then the full extension to 1.618 of this AB move projected from C comes around 918 to 920. Roughly, we can 913 to 918. And 918 is also so that's where it actually goes to, about 1.618 extension, or price, this AB swing getting extended when projected from point C. And we have really something really interesting going on here, which is market symmetry concept. Look, this correction, this pullback which happened was a same magnitude as what we had seen here, and also it retraced right to the 38.2% retracement. So 38.2% retracement of this AB, of this black colored swing, and then it did the same thing again, retraced right to the 38.2% retracement, and the swing in terms of its magnitude is really similar. So the market symmetry concept is there. So this gives us a pretty good confidence that actually what we are looking at is a strong market, and we could have another ABCD which I have drawn in green color, which will also take us to roughly about 910 ballpark figure. So we'll have a confluence of two cycles coming there, this big one in blue, and then the recent one which is in green. So the chances are it's going to be a pretty important level to watch, and looks like this market wants to go and tackle 915 to 918. So again, the housing sector is pretty strong, especially when the expectations for the interest rate moving lower started to come in. We have seen a pretty good move happening in this market. So really, really interesting thing to take a look at. Okay, now let's take a look at the XLY, which is the Spider Select Sector Fund for Consumer Discretionary. So again, a similar kind of thing is that with the expectation of lower interest rate is likely to help some of the equipment, house, etc., which the consumers might have financed. The interest rates might actually help if they go down, so the payments could be reduced. Perhaps that could actually help with the discretionary spending, because there might be more disposable income available. So we had been watching this, and we had actually also drawn this channel. So it's actually getting above this channel, but the market is also reaching a really key point, which comes around 196 to 200 roughly. I've drawn this blue colored pattern here. So this could actually be a pretty strong resistance as well. It's a target, but could turn into a resistance level as well. But if the market is able to get above 200 mark, then what I think is that we are actually moving in this bigger ABCD, which is in green, which could see this market go anywhere between $239 to $270 per share level for the consumer discretionary. Again, the strength in this market coming, especially if this level is broken, which is between 196 to 200 to the upside, will be an indication that perhaps the market is pricing that the interest rate cut cycle is likely to begin sooner than what the market was anticipated, or what the Fed had communicated with one rate cut coming in, I don't know, sometime in November. The expectations might come as soon as September, and November or December could see another cut. So the market might be even pricing two rate cuts. So we'll have to wait and see, but this is what the data is telling us. Is really, really interesting, because we saw the housing one, and now we see the consumer discretionary as well. Now let's take a look at the Dow Jones transportation. So I'm going to move to the daily chart for this, because this is the one we were looking for our analysis. And here we go. So the transporters, in my opinion, they have been in a very long range bound formation since November of 2021, and we have actually seen in certain indices a bear market which lasted, I think for Nasdaq started in November 2021, and then the indices finished that move to the downside in October of 2022. So here, really long sideways trading range formation, and I also think that we are in this inverse head and shoulder formation with pretty good symmetry in there. Now we can see that this market also had a pretty good move for since last week. We can say that last Thursday, 11th of July, when the CPI data came in softer on the softer side, and you can also see that there is element of interest rate sensitivity available in this market as well. And the reason is that because transportation will be actually moving a lot of consumer goods, and these could be some of the heavier goods such as furniture, which is consumer discretionary items. So if the expectation for the interest rate is likely to move lower, which could help with payments going down a little bit, whether it's mortgages, credit cards, etc., whatever it might be, it means that consumers will have more money to be spent in terms of disposable income for discretionary items, and that could actually spur demand for bigger luxury items. And that would impact the transportation. And of course, I'm just talking about the inland transportation, but overall, the spending cycle will increase, consumer goods movement, other kinds of movement for other kinds of goods. So I think this market is also pretty interest rate sensitive. In terms of projection, what is likely is this market is likely to get into this big gray box, and that could be a pretty big zone for a resistance, possible resistance, also our target, but also a resistance. Shorter term, we can actually look at the resistance coming in from here, which is just a structural resistance coming from the left hand side, and then a little bit higher this one. But what I'm really expecting is that this market to get into this big gray box where we can find some pretty strong resistance, and also our target for this market. We have drawn this trend line, which is nicely intact. So unless the market breaks this trend line, I personally think that we are actually in this ABCD higher, the orange one, the black one. We also have this blue one, which all get into this zone, and these levels around 17,330 to the upper boundary, which is 18,250. These levels must be watched really carefully when the market gets there, because they could be pretty strong resistance levels as well. XLU, here we go. This is the utilities. And here what we have seen is after the market completed this ABCD, it went a little bit higher, but pulled back right into really good support because that's the 38.2% retracement from this low to this high, and 50% this low to this high. So as long as this support is held, in my opinion, this market is actually moving higher. And we could see 74, 78. And if it is broken to the downside, then what we are in fact doing is, after finding the resistance from this 78.6% retracement, we might actually be in fact in this ABCD move lower, which could in fact take this market to right here, structural support from the left hand side coming as well. So that could be the shorter term target to the downside, but if the market is strong, and which probably it is because of this support right here, if there is a pullback, it might just be a retest of this low, maybe slightly lower low, or it might actually be completing this ABCD. So there are three possibilities, but either way, we'll know quite soon. But it will just complete this ABCD move higher. But right now, it's found pretty good support, and maybe the market is actually ready to move higher. So we'll have to wait and see how the utilities will play out. But one of the things that I can see is that with the kind of moves that we have seen in consumer discretionary, a slight pullback happening in the utilities is kind of expected, because when the discretionaries were under pressure, the utilities have done pretty well, and similar thing with the transporters as well. So again, this is what we are watching in these sectors. Yeah, we do have some time, so let's have a quick look into the stock indices. So let's start with the Nasdaq 100. The Nasdaq 100 futures, what we see is consolidation right here, a really negative candle on the 11th of July, and just been sideways in sidebar trading action. And it's just if we just look at S&P 500, this is the cash index. We can see this index being really strong, and we have upper targets for this one, which is more clearly seen on the weekly chart. Here we go. So we can see actually this market tap into 6,000, 6,100. So this is what however, on the Nasdaq 100, we have already completed this this big pattern, and the market is just consolidating. So the expectation is that we are actually going through a rotational phase, where we are seeing certain indices which were leaders, such as the Nasdaq, actually not perform as well compared to some of the other indices. For example, let's take a look at the Dow Jones E-mini futures. Look how strong this one is. So when Nasdaq was really running high, there was a fair amount of time it spent going sideways and being much lower compared to S&P 500 broad index, and also especially with respect to the Nasdaq, and now it's playing the catch up. So it could actually be this ABCD right into 47,373. That might actually be a possibility. But look how strong it's been, and especially on the daily chart, we can see that today where the Nasdaq 100 consolidated, it had a big massive move, and we have a shorter term target of 42,178, which will be the 1.618 expansion of this entire downward move we have seen in the month of April. So this is where the market is going shorter term on the daily chart, 42,178. And then let's take a look at the Russell 2000, because this is the most interesting one. Look at the moves. This is the one which was really lagging behind, and look, ever since we got that CPI print coming to the soft side, Fed's rhetoric about starting the, or Fed saying that Fed doesn't really need to wait till to see a print of 2% or lower for inflation, or whatever gauge they are using for it, which is CPI and also core PCE. This market, which is really interest rate sensitive, has just exploded higher, and this is why I showed you the KRE index as well, because those smaller banks, regional banks, are really supportive of these smaller companies, or they go to these companies, these companies go to these banks, develop a relationship, get a lot of financing through them. So we have already blown through the 1.272, 2320 is the next move. And the way the market is moving, looks like it might just get there tomorrow. And here we go. This is the longer term of what we were watching for quite some time. We're watching for this ABCD on the weekly chart, and now it looks like we might actually be able to achieve that target. So again, just wanted to show you the rotational aspect of this market, what is happening inside these indices. Some of these indices which were not performing that well, such as Russell 2000, because smaller companies, smaller balance sheets, interest rates moving higher, a burden on the finances, things becoming expensive, etc., etc. And Dow Jones have certain kind of stocks which are not tech stocks, old economy stocks, for example, banking stocks, JP Morgan, etc., other stocks. Now looks like some of the money is coming out of the artificial intelligence related stocks such as Nvidia, which were really hyped, and moving into other sectors. And this is what we are looking at. So there we go. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.